Hello everybody, this is Anuj Tripathi and you are watching the Review Universe. So today a very special guest joining with us, Dr. Srikanth. Dr. Srikanth starting his career at the year 2008 and 9 as a medical writer has came a long way with having 15 years of experience. He has recently written a book called Millionaire Dreams. Millionaire Dreams is a book about the path of becoming a millionaire, or you can take it as a guide for your own self as well. So let's not waste any more time and welcome Mr. Srikanth and discuss his ideas over this book. Hello, sir. Welcome to this podcast.
Hi, Anuj. I'm fortunate to kind of have you here and kind of be part of your podcast today.
Definitely, sir. Okay, so sir, let me ask this question with the book firstly. Like you have choose the name of your book, Millionaire Dreams. So what is the idea behind this?
No, I think most of us, every person who's just started their career or who wanted to be in business, definitely would have this dream of being reaching a millionaire. So I think that's something that resonates with most of us. I thought this is something that I should put it to kind of grab attention of the audience.
That is kind of very specific you have. What is the exact concept behind this book? Like is this a guide or something which you want to tell somebody who is just watching you for the first time, watching listening the name of your
So basically, Millionaire Dreams is for anyone and everyone. So I wouldn't say that this is only for a fresher or a starter or someone who's just couple of years. For anyone who is at any point in their career and want to kind of rewrite their financial story, I think this is going to be a step-by-step guide for them. And I think I've read several of other finance books, and I think what I've understood was each finance book talks on a particular aspect of it, but what was missing, I thought, was a complete end-to-end picture. So connecting the dots. We hear a lot of YouTube videos, we kind of a lot of podcasts we hear, and there's a lot of material out there in the internet as well. But what was missing is a very step-by-step process, right from the start until end. If you connect all the dots, it should be it should be useful for someone who wants to kind of navigate. That is something a missing piece. I thought probably put it in a form of story. So this book is not going to be only numbers and finance jargons. This is completely different. So I put it in a narrative format, a very simple story which resonates with all of you. It's a kind of a mentor, and there are two associates there, two people who are at different phases in their life. One who is doing excellent, who knows a lot of finance and all, but still, despite knowing all of it, they're not able to succeed in finance career. And the other person is like who's looked into other people, like he compares himself with their peers and
Yep.
sees that why am I not there, and he kind of does all the purchase and ends up into debt trap. And how do he gets out of that? So it's a story that you're going to see, and it is going to kind of resonate with most of you. So it is for someone who's starting fresh in their either a job or who want to get into entrepreneurship, someone who's stuck in mid-career, who's stuck with a lot of debts and EMIs, and how do I kind of come out of it? Someone who's looking to invest but do not know how they want to kind of grow their money. I think we have spoken about it. So it is a 360-degree, I think, education about money. I would say nothing, anything specific. If you want to know about money, right from start until creating, building a legacy for yourself and your families, and I think future also. I think every aspect is covered in a step-by-step manner, even into behaviors. There's mindset, there's habits. So there's a lot of things that are there.
Okay, so let me be very specific that what are the tips you want to give 20-year-old or mid 30s year person? So what are the tips you want to give so that they can manage their money better?
First thing is they need to kind of have an understanding about how money works. So that's what we're going to discuss that in Millionaire Dreams. But it is not just about earning, but after earning, how do we manage money? So there are various aspects to it. So I think if you look at my book, I think I talk about a kind of blueprint of how you kind of manage your money. There are several aspects to it. One is you get your income, so it is a source of earning. Second is how do you manage your expenses? So how do you spend your money? Third is when you earn, there's also a principle of you can earn money while you sleep. So
Yeah.
how to make money work for you? So that is where investment concept comes into picture. And when you put all these three together, so you can clearly kind of calculate, see, if I earn this much, this is what I achieve. Okay, this much money I'm going to kind of do. But beyond this, there is one more missing piece. Even if you kind of say that within 5 years, if you put in an Excel sheet, if you put a calculation, I get this amount. But despite that, you will not be able to meet that. So there is another factor which impacts finances. So that is what is the missing piece, and that is what I wanted to address in this book. It is not always about numbers. This is beyond that, and that is something people should come back to this book and understand how money works.
Okay, so this is going to be one of my personal questions. Like, in terms of savings, so should we go towards saving money or investing money? Which one would be better?
So what I let me put the question back to you.
Yeah.
All right. So as soon as you receive, I think a lump sum amount, what do you do with that money? If you're a job or if you're in a business, as soon as you receive money, what do you do with the money?
Most of them are kept in the bank, or we just send, do any insurance or something. Most of the times I keep it in bank only.
All right. So do you understand how what are the different investment options that you have?
Currently, I don't have that much knowledge. Let me admit. I
All right.
just only know about most of them are mutual funds. I invest in that some little bit amount of money in the form of SIP. So I
All right.
don't exactly do that much. So I would like to know more if you
Yeah.
can just advise some
Sure,
of them.
sure, sure. So I think all your investments, one piece that we need to kind of think about is every investment that you think about should be goal oriented. So you
Okay.
need to first have a picture in your mind. What do I want to do with this money? Okay. The moment I get it, should I put it in bank? Should I put it in mutual fund? Should I put it in gold? You might see other person is doing that, but that is not applicable for you because you need to have a goal in picture. For example, I say that I have a goals can be short term, mid term, and long term.
Yeah.
For example, I say that I need some money within 2 years. All right.
Yeah.
So there are several 8 to 9 investment class that you can pick from. So I don't want to kind of discuss all of it now, but there are 7 to 8 investment class. So you just spoke about mutual funds and FDs. There are beyond that. There's gold that you can invest into, land that you can invest into. There are several other government securities that we have that we can
Okay.
invest into, and yes, there are many more options that we have. So I think the missing piece here is people just look at others and then try to kind of do their investments, which is highly inaccurate. The good thing is you need to have your goal in mind because these asset class also work like that way.
Yeah.
If you need money within 1 to 2 years, you shouldn't be putting your money in land because land is a
Long.
illiquidated asset, so it
Okay.
takes
Yeah.
long term for to go. And if you also want your money to come back, you cannot sell your land immediately. It takes months
Definitely.
and years. So which is not, as I think, meeting your objective, right? I need money within 2 years. It is not met. So you need to kind of look into those options which meeting your goals. Okay. So for that, I think simple option could be an FD. FD is kind of you can just open an FD, just walk up to a bank, and nowadays it is pretty much digital, so you don't even have to walk up to a
Yeah.
bank. Within your account, you click FD and then it's done. And the moment you click FD, you can choose the tenure that you want. How, when do you want your money? When do you want your interest to be credited? You know how much money you're going to get at the end of this investment, and you have a goal in mind, right? So you
Yeah.
can, and if there's some emergency that you want to kind of don't want to wait until then, you can still click a money and the money comes back to your account. So that is the, I think, flexibility that we have. So it has to be goal oriented. That's what I would say. And again, investment comes with risk and security. All right. So there are two aspects. If you want to take a lot of risk, if you're a person who's willing to take a lot of risk, there are investment options where you can grow your money at the rate of 23% annually, 25% annually.
Yeah.
All right. But there are also some people who don't want to take risk. All right. So for them, I think you have to kind of always, when you look for investment, you should look for a factor of inflation in your mind.
Okay.
Inflation, on an average, we have 6.1 to 6.5. So your 100 rupees, which is worth today 100 rupees, next year it is not going to be 100 rupees. The rate of it is going to be reduced to 94 rupees, the value of it. So if you put your money in house, the cash in house, the value of it is going to be depreciated every year. So that's the biggest mistake that most of us do, putting cash into money. The second
Got it.
mistake that we do is putting our money into savings account. How much rate of interest are you going to get at say savings account?
Most of
Put
them are 6, 7. or
Three
8%?
to four, 3 to 4%. If you look, put
Okay.
your money in bank, it is just 3 to 4%
Okay.
of interest banks pays back to you. So, which is like when you put money in a bank, the inflation itself is 6.1%. Next year, you are, I think 100 rupees is going to be reduced by 3 rupees. Okay.
Okay.
The value of your money that you have in bank is just 97 rupees.
And
So I think
the inflation is also added.
yeah, and again, yeah, inflation grows year on year. It depends on the government and how the government is managing how is the GDP of our economy and all.
Yeah.
There's several other factors to it, but so this is all about education, which no one teaches us. So that is the purpose, the prime purpose of this Millionaire Dreams. Yes, we all have dreams, but there are two aspects to us. One is needs and wants. So there is something that you need to know. That is called the basic financial education. So the first part of the book covers the basic financial education everyone needs to know. And yes, the Millionaire Dreams, if you want to reach that, there is another path to it. First, fix your basic, that's the needs. And you wanted to become a millionaire, so the wants will be covered later. So build the basement perfectly so that your dreams can be achieved. So
Okay.
that is the theme of this book.
Okay, sir, I have a follow-up question to this. Like, your most of the target reader will be kind of at the age of mine, like 20 to 25 of them.
Hmm.
Okay,
Hmm.
because that is the time we saw dreams. Okay,
Hmm.
so can you give any exemplary way so that we can have a long-term goal as well, short-term goal as well? Like, we want cars, we want house, we want to do party and all. So how should we manage with the basic amount of, if I say 50K we are earning in a month? So how should we manage that?
So if you're receiving, I think there is a formula that I'm going to talk about in this book, and it's going to be 50, 30, and 20 principle.
Okay.
All right. So whatever earnings that you have, at whatever stage in your career that you are in, whatever earnings that you have, 50% of it goes into your expenses. Okay,
Okay.
basic expenses that you have, that is rent, your daily expenses, grocery. These are standards, fixed. So any person who's living cannot get away with that. So that is 50%. 30% of it goes into your EMIs. So if you're purchasing loans and other things, right? The commitments that you have, financial commitment,
Yeah.
and make sure 20% is saved for your investments. All right, so it's a basic principle. You cannot don't just go by 20% principle. This is the basis. You can, if you're able to save more money, if you're able to save more money in expenses that you have, then I think you can go beyond 20 as well. But the basic minimum is 20%. Keep it for your investments at whatever stage in your life. And again, goals vary at different stages in your life. Like you spoke about 20 years. So at 20 years, I think there's a lot of career ahead for you. All right. So you can think about midterm, long term, and even short term goals. What could be an immediate short term goal? Buying a kind of a bike or a small car for you. Target 1 year, 2 years. So think about, I said there are several investment classes that we have. All right, so look at the investment class that is suitable for you. If you want short-term money, there are several investment classes we have. I think, like I spoke about, you have the FDs, we have gold. There are several other government securities that we have that we can kind of look into. So these are the short-term ones which you can liquidate also immediately. Okay, don't think about putting your money into your long-term things like into land or mutual funds or other things, which is going to be a very long term. Again, you have to set your goals. What is your goal? Based on that, you need to kind of put your money into. And one of the biggest secret about money is money grows if you give time. So time is the biggest factor. So if you are at 22 years of age, then you have the biggest advantage in your life against someone who is 40 years, 45 years. For them, they don't have time, so they will not
Yeah.
have time to grow your money. And if you take example of Warren Buffett, who's the richest man in the world, he started investing at the age of 14. Okay,
Yeah.
and he became rich only after 35, 40 years. And he's given a lot of time, and I think it's the principle of compounding which does the magic. It's called the eighth wonder of the world. So give time, invest money at early in your ages, early in your career, rather than investing your money into EMIs. You're paying to bank and you have to pay it back. But if you invest into investments, proper investments, thoroughly researched based on your goals, then I think your money is going to grow. By the age of 30, I think you should be comfortable.
Got it. So, what are your kind of opinion about the loans and the credit cards, if ask?
All right. So when you come to loans, I think we call it as debts. So debts are two types. One is a good debt and a bad debt. All right. So when do you say the debt is bad debt? When when the interest rate is beyond 10%.
Okay.
Okay. So if you're interested, for example, you'll take a credit card, it is somewhere between 12 to 18%, which is higher than 10%.
Yeah.
Take personal loans, 20%, 24%. Is there a way that you're going to grow at that rate? Even your annual increment that you get in your offices or your business is not more than 8%, 10%. And
Definitely.
you're already committing to an interest rate of 20%, 24, 20%, 25%, which you're never going to meet. So if you have personal loans, if you have credit card loans which are beyond 10%, I think you will never be able to kind of meet that, and then you will end up in a debt cycle. It's going to be a cyclic thing. It is only going to grow, and never in your lifetime you will be able to clear it. And there's something called good debts. Okay, so debt is not always bad. Something like a home loan or an investment for a study loan. So these are investments you're making. Okay, 8%, 8.5%, which is manageable, and you're investing into an asset. Okay, asset grows over time, the value of it is like 10. If you're investing into real estate, there are instances where, depending on the city that you're buying, if you're looking in Hyderabad, I think it's the top highest growing real estate market. Invest now, 5 years now, 10 years now, there are the instances where there's 300%, 500% increment in, I think, the amount that you
That's
invested.
huge.
Yeah. But again, the choice, there is a choice. Not every city gives you that. You have to be smarter in picking your choices. And that's something that you learn by education about finances. So that was about good loans, right? So you're investing into home loans, which is going to go as an asset for you. Later on, you're going to get your money back more than what you invested. So you're investing at 8%. Your returns could be at 12%, 15%, even 30%. So you're getting money back. When you're putting in money, you're borrowing money, you're getting money back. Money is
Yeah.
not going out of your pocket. All right. And then there is other thing called your education loan. You're investing on your self education, and your mind is the biggest asset for you, which no one thinks about it. We only
Hmm.
talk about physical assets, but no one thinks about mind as an asset. When you invest in yourself, your skill set grows and you're more potential. And it is like there is infinity. You cannot give it a percentage to it. Okay. You can grow at an infinite rate. If you're well educated and you know things well, people who studied well, I think they're earning well because they're invested into their education. So that is the good best. I think that's a good investment that you can make into. So that is a good debt. Personal, I think there are two good loans. That is, go for a house loan or go for an education loan. Beyond this, any loans that you're going is a bad debt because there is hardly any chance that you're going to make it up at that rate of interest you're going to earn unless you're kind of diversifying your income levels. So there are several income things that you can have. It could be that I earn through a job, I can own a business parallelly, I invest into lands which are going to grow over a period of time. A book like this is an investment for lifetime, right? I just one time investment I did in kind of writing this book, but I can earn like royalties throughout my life and even after I leave.
Yeah.
I'm leaving a legacy. So think about multiple ways of earning money. So that's another aspect that I want to talk about in this passive income.
Got it. Thank you so much, sir, for sharing these tips to me. Okay, moving on towards your book only. Like, what inspired you to write this book? That is there any specific thought you have earlier that you will be writing a book in future, or this is just instantaneous?
No, I think a couple of years back, I think while I was driving to office, so I had nil knowledge about finances myself. So I never
Yeah.
kind of had any knowledge. I just took it as life comes ahead. So I was just traveling in my car to office, and something really struck me. So because I was just looking at how much of debts I had, so I looked back. I had couple of home loans. My credit card loans have peaked, and it started worrying me slowly. What if I lose a job? Okay,
Yeah.
do I have other sources to support it? All right, this sort of worries slowly started pinching me, and then a little bit of sleepless nights for some time. Then I heard story of my some of my cousins and brothers about how they are suffering because of finances because they were not able to manage their finances. They invested into a lot of what you call share market, equity, huge amounts of money. So all of this was because they did not have knowledge about finances, and
Got
I
it.
myself did not have knowledge of finances. Then I thought probably I think this is not the way I should be working. Then I started reading several finance books, and invested in my time into a lot of, I think, upskilling myself. Read a lot of books. I put a target that I'm going to read 100 books per year. So that was the biggest target that I gave for myself, and I think that hit me hard, because I think that is when I think I started to see a change in myself. I started to perceive how to kind of manage finances in a different perspective, and I thought probably I have a story now to share, and what is the best way to kind of do that. And I thought the best way to do that is the mass communication, which happens through book. So
Okay.
that's how this idea of writing a book came into picture. Yeah. So my personal story is one of the factor was that, but I've seen several of my friends, my own cousins, who have lost huge amounts of money just because they did not have finance education.
Okay, got it. So, a short intro you want to give about your book. Who is somebody for the first time they are going to read this book? What are they going to get from this book?
So for someone who's going to first time read the book, we are going to cover every aspect of finance, right from what are the different sources of income a person can have. So it's about active income, passive income. How do you budget your money? How do you make your expenses? How do you spend your money? So keeping budgeting is something like you will be knowing where your money goes, rather than later on worrying that where did my money go. Okay, so
Got it.
budgeting is second aspect that we cover. We're also going to talk about investments, so the various investment asset classes that we have. How do we manage, where do we put our money to make it work for us? So that's about growing money while you sleep. Again, asset class, and we also talk about goal based investments, which is the biggest factor here. So these are all the three pillars of how you manage. So income is there, there's going out, you're managing how it's going out, how it is coming in. Once the money comes in, how you also make it grow, that's the investment. So these are the three pillars. The central pillar, I will not reveal it here, because that is a spoiler here, which they should come back to the book and look at it. But that's a very, very, very important factor, because all of this information that I'm talking is available in the internet. But that aspect, I think not many of them touch that piece, and that is a very crucial piece. And you need to know that. Only then you will be able to kind of meet these three pillars work for you. Okay, so I'm going to cover income, expenses. How do you manage expenses? That is called budgeting. Then how do you kind of manage your investments? We're also going to talk about mindsets, habits. Okay, and then beyond that, how do you kind of protect your money? You've grown your money now,
Yeah,
and if you don't, after you growing your money, it just hardly takes a second for your money to be lost. One bad thing in your life, one bad decision in your life, entire income that you've earned can be washed off. So how do you also kind of protect your money? And then of course, when you grow older, I think you would want this money to be passed on to your kids and
yeah,
grandkids and all, right? So how do you build that legacy? So that piece is all of it, end to end, right from income to kind of building a legacy for yourself, finance, mindsets, habits, and of course, I'm going to talk about how do you get to this dream of becoming a millionaire.
got it. Exactly. That's what I want to hear from you. Okay. So thank you so much, sir, for this conversation. And I wish everybody should read this book. And I will myself read this book as my team has only read this. I haven't got a chance to read this one, but I would like to read this book. Okay. So thank you so much, sir, for this conversation. And your last note on this book and the conversation.
All right. So my last book note was, I just leave it with a note over here that I wish I had a book like this 10 years ago. All right. So I think you guys are fortunate enough that there is a guide which is available now. This is not just like I read one time, this is over. So
Yeah,
this is something that you keep referring back. It is going to be beside you. You just have to have a notepad. And as and when you progress, because money doesn't grow overnight, you have to give some time. So don't even listen to options of becoming a millionaire overnight. So I think if someone is saying that, either it's a kind of a lottery that they've won, or is it that it could be someone kind of cheated someone and bought the money. But if you want to go use it, I think, as a genuine person who want to kind of earn money, then I think this is a step-by-step guide that is going to help you. And if you want to become a first generation millionaire in your family, I think you should read.
definitely, definitely. I would personally read this one, and I would suggest everybody who is watching this podcast should read this. And whoever watching this reel as well, you should read this one, and just give your reviews to the Amazon page. We will be adding these in the description as well. And thank you so much, sir, for this conversation. Happy to
Thank
have
you,
you on
Anuj.
this podcast.
Thank you. Thank you so much for giving me the opportunity to kind of share, I think, my journey for this book. So thanks, Anuj, and entire TRU team for giving me this opportunity and providing a review.
Okay,
Thank you.
so everybody, you should check out this book, and the book link is in the description. Keep reading.